Hello day traders, let's discuss what is going on in American stock and currency markets. The military conflict between Russia and Ukraine remains the catalyst for market moves. In the spring of 2022, Russia has to deal with the barred access to airports and seaports for its aircraft and vessels, terminated long-term contracts, financial, sports and cultural isolation. For the time being, it's hard to reckon losses from the sanctions imposed by the United States, the European Union, Japan and Taiwan for the Russian economy. However, they will deal a devastating blow. The US economy clicked into gear in February despite soaring inflation and the Omicron wave that has gone off the radar recently. The Chicago PMI sharply dropped by 56 points in February from 65 in January. It could indicate a slowdown in the national economic growth. Retail inventories also contracted significantly last month. The indicator rose just 1.9% in January from 4.7% a month ago. Today, markets will get to know the ISM manufacturing PMI for February. Analysts expect it to edge up to 58 from 57.6. Yesterday, the global community planted hopes on at least a ceasefire in the direct talks between Russia and Ukraine. With this outcome, markets would have had a brief pause in a downturn. However, the lengthy meeting ended in nothing. Russia continued its attacks on Ukraine during the talks. Thus, major US stock indexes closed mixed yesterday. The Nasdaq closed with a 0.4% gain, driven by appreciating stocks of the auto giants, Tesla and Rivian Automotive, as well as the cybersecurity firms. The Dow Jones closed 0.5% down and the S&P500 shed 0.2% yesterday. And today the index of the US economic health is consolidating sideways, trading at 4,367 points. It's likely to halt in the corridor between support at 4,340 points and resistance at 4,400 points. The whole world has been united by the support to the Ukrainian folks in the face of the Russian invasion. The Ukrainian military forces, backed by the militia, are showing remarkable resilience. Unprecedented financial, humanitarian and military aid is being delivered to the country. European countries have admitted almost 500,000 Ukrainian refugees. The news on the military front creates uncertainty for global markets and the Federal Reserve. As some Russian banks have been cut off from SWIFT, the US regulator would have to take emergency measures to increase the US dollar's liquidity for participants in the international financial system. And the Fed's policy meeting is scheduled for March 15 and 16, and Jerome Powell is due to speak in Congress on Wednesday, and perhaps the market will receive some clues to the timeline of rate hikes tomorrow. Meanwhile, the hostilities in Ukraine confuse market participants, so the US dollar index is locked inside the range between 96.50 and 97.10, briefly pricing 97.00. Currently, the index is trading at about 97.06. Investors are assessing geopolitical events and their risks involved, such as inflationary ones, risks related to commodity supplies, including disruptions of supply chains and even cancelled supplies of energy commodities. The oil rally is imminent under such market conditions, and it's confirmed by the fact that Brent benchmark rate is trading today at $103 a barrel, and WTI is trading at $99.50 a barrel. The Canadian dollar is sure to strengthen with such solid support. On the other hand, inflation is also raging across Canada amid some headwinds. Its producer price index released yesterday jumped to 3% on months in January from 0.5% earlier. The index skyrocketed to 16.9% in annual terms from 15.9% a month ago. Besides, the commodity price index increased to 6.5% on months from minus 2.9% in the previous months. Its annual rate also surged to 30.5% from 29.3 points. Canada's GDP expanded by 1.6% in the fourth quarter. Sequentially, the GDP grew by 6.7% on a yearly basis, much stronger than a 5.5% increase in the third quarter and the expected 6.5% growth. Nevertheless, the rapid rally of oil prices pushed the USD CAD pair down. Now the currency pair is consolidating at nearly 1.2668. Analysts warn that the pair could be below the intraday support at 1.26 during the downward move. Amid the hostilities in Ukraine, the crypto market is also struggling for its recognition. In the 21st century, the world is fighting with the digital money. As of March 1st, non-profit organizations donated the Ukrainian government 26,000 tokens worth $24.6 million, while the Ukrainian crypto wallets are amassing digital funds. The US and the European allies are considering crypto sanctions against Russia. Crypto exchange platforms advocate for blocking access to Russian transactions. When Russia introduced into Ukraine on Thursday, trading bitcoins in Russian rubles swelled by 259% intraday. Since then, the flagship crypto has appreciated by 13%. Today, the digital token is trading at about $44,500. Bitcoin is posted to stick to the upper border of the corridor between 37,971 and 44,952. Perhaps Bitcoin will regain its status of a safe haven asset. The markets seem to be calming down from the first shocks as the result of Russia's invasion of Ukraine. The US stock market could begin a new bullish wave, but fierce military clashes might derail the recovery of stocks and case a slump. Keep close tabs on the situation in American exchange floors on InstaForex TV channel. Feel free to leave your comments. Our analysts are always ready to reply, and see you tomorrow.